Quarterly theory is either misunderstood or ignored by most traders. But from my 6 years of trading experience, I can vouch that this is the most effective way to combine time and price on the charts. So in this video, we are going to cover what is quarterly theory, marking quarters for different time frames, what is Judas swing and true opens, possible price paths for quarterly theory, and how I use quarterly theory with higher time frame PD arrays. So let's get started. So first of all, let's study what is quarterly theory. Quarterly theory is basically a time-based element on the chart. From the previous videos in the playlist, you might know there are only two elements in the chart, either price-based or time-based elements. What are price-based elements? Order blocks, fair value gaps, and liquidity. Okay. So now let's come on to how do we use quarterly theory and what does it actually mean. So quarterly theory suggests that there are 4 quarters in time, and each quarter serves a different purpose. Okay, so you have this quarterly theory as your time element. Quarterly theory is your time element. Now if you combine this with higher time frame PD arrays, which is your what? Price element. You are basically combining time and price in a very effective way. So this is basically why quarterly theory is used. Quarterly theory is used to combine time and price and take trades from higher time frame PD arrays at the correct timing. And what are higher time frame PD arrays? Higher time frame PD arrays are of 3 types: order blocks and their types, fair value gaps and their types, and liquidity. So you can study all 3 of these PD arrays in the previous videos, and this is just a brief overview of the quarterly theory. Now let's move on to how to mark quarters for quarterly theory. So marking quarters for different time frames according to quarterly theory is pretty easy. You just need to divide every time frame into 4 quarters. For example, you are considering an yearly cycle. You will divide the 12 months by 4 to attain a quarter of 3 months each. So first quarter will be from January to March, second quarter will be from April to June, third quarter will be from July to September, fourth quarter will be from October to December. Remember, each quarter has a different purpose, which we will study in a while. This is just to show you how to mark the quarters initially. So we will study how these quarters are used, but first of all we will be looking at how to mark quarters at each time frame. So for your monthly cycle, your first quarter will be the first full week that has 7 days. If a week has 3 days in the starting of the month, this wouldn't be considered and this would be called as distortion. So your first Q1 of the monthly cycle would be your first full week. Your Q2 of the monthly cycle would be your second week of the month. Your Q3 of the monthly cycle would be your third week of the month. Your Q4 would be the fourth week. Also remember here as well that these 4 quarters have different purposes that we will discuss later in the video. This is just to tell you how to mark the quarters on different time frames. For the weekly chart, your Q1 would be Monday, your Q2 Tuesday, your Q3 would be Wednesday, your Q4 would be on Thursday. For the daily cycle, we have quarters of 6 hours each, and all these times are in EST or UTC-4. So first quarter or the Asian session will be from 6 p.m. to 12 a.m. EST. Second quarter will be from 12 a.m. to 6 a.m. EST. Third quarter will be from 6 a.m. to 12 p.m. EST, and fourth quarter will be from 12 p.m. to 6 p.m. EST. Now let's break each of this session into 4 quarters. How will you do it? You will basically take 6 hours and divide it into 4. So what does 1 quarter represent then? 1 hour and 30 minutes. So let's break these down and see. So when a session cycle of 6 hours is divided into 4, we get 4 cycles of 90 minutes each. You have also calculated this above, you can see here. So let's see the 90-minute cycles for each sessions. So you can see for Asian session we have Q1, Q2, Q3, Q4. This is all in one Asian session which starts from 6 p.m. EST and ends at 12 a.m. EST. You can similarly divide the timings of each session into 4 different parts and get the 90-minute cycles. Now if you divide the 90-minute cycles here, if I can 90-minute cycles into 4 different parts, you will get what? You will get macros. And people like to say it that they invented these macros, but they aren't invented, they are just derived by dividing 90 minutes by 4. Every 90-minute cycle here, and in every 6-hour session you can divide it into 4 parts and you will get your macros for that session. Let's see what I am talking about. Here you can see a 90-minute cycle is divided into 4 quarters, giving a cycle of 22 minutes each. These are also called macros. So let's divide the first 90 minutes of the Asian session. These are the first 90 minutes of the Asian session. If I can highlight this is the first 90 minutes of the Asian session. We are dividing into 4 parts further. So let's see what happens. So the first part would be from 6 p.m. to 6:22 p.m. This is macro of Asian session. Then this is another macro of Asian session. This is another macro of Asian session. So as you can see, the macros weren't invented by anyone. They were basically derived by dividing the cycles of the 90 minutes into 4 different parts. So I hope it is clear how the cycles were invented and how to mark the quarters. Now let's move on to how to actually use these quarters. As you might know that Q1, Q2, Q3 and Q4 have different purposes. So let's see how to use them and do actual potential trading. Now before moving to the functions of Q1, Q2, Q3 and Q4, we must know 2 basic terms, that is Judas swing and true opens. So Judas swing is basically a difficult term to represent liquidity sweep, and all of the liquidity sweep scenarios discussed in the liquidity video are applied here. Now let's see the points where Judas swing is applicable. So Judas swing is applicable on weekly highs and lows, structural highs and lows, equal highs and lows. So these are the 3 points where Judas swing can be applicable. Now let's see what are true opens. So true opens are area revisited by price before giving an actual move. So suppose price is moving like this, it is consolidating, and the true open is somewhere here. Price will come down, test this true open before giving the up move. So true opens are usually revisited before the actual moves happen in price. And one thing to remember about true opens is that they have a static value, like they can't change too much. So the yearly true open is marked at the first Monday of April. The monthly true open is marked at the second Monday of the month. Basically, when these dates occur, you place a horizontal line on that price at that time, and that basically marks your true open. Weekly true opens occur at 6 p.m. EST every Monday. Daily true open occurs at 12 p.m. midnight EST time. NY session true open occurs at 7:30 a.m. EST time. Asian session true open occurs at 7:30 p.m. EST time, and accordingly London session true open occurs at 1:30 EST time. So now let's come on to the most awaited topic as to what is the function of Q1, Q2 and Q3. So let's come on to the possible paths for quarterly theory. So here we will see how Q1, Q2, Q3 and Q4 are used for different purposes and how we can use it in our actual trading. So there are 2 possible paths for quarterly theory, AMDX and XAMD. We will be studying both in this lecture. First of all, we come to AMDX. What does we mean by AMDX? In an AMDX price path, price will accumulate in the first quarter. As you can see, Q1 it is accumulating. In the second quarter, it will manipulate or will create a Judas swing. You can see in the Q2, it manipulated or created a Judas swing. Do remember this gray line is a higher time frame PD array. Now, as you can see in an AMDX model, Q1 accumulates, Q2 manipulates. Now Q3 will act as a distribution. Here you can see there are 2 kinds of distribution ranges forming, and Q4 acts as continuation or reversal. In this case we reverse, so this will be reversal. So I hope the AMDX scenario is clear. In Q1 we accumulate, in Q2 we manipulate, in Q3 we distribute here, and in Q4 we either reverse or we continue down. So how do we execute our trades and what are the areas to trade in AMDX? So the areas to trade in AMDX are Q2, Judas swing. How will you trade here? You will take a trade in the Q2 Judas swing once this higher time frame liquidity is taken, or you can take a trade in this Q3 distribution phase once price gets below the true open. Okay, so you can either short in the Judas swing phase once the liquidity on the higher time frame is taken, or you can short it once price takes the liquidity above true open and closes back inside. This is in the distribution phase and this is in the Judas swing phase. So in the AMDX model, there are only two phases that can be traded, Q2 and Q3. So let's move to our second type of price path, that is XAMD. In XAMD price paths, the first quarter consists of a reversal. This is Q1 reversal. Second quarter consists of accumulation. Third quarter consists of manipulation or Judas swing. Fourth quarter consists of distribution. So here too you can take a trade either on the Judas swing or on the distribution level. So if you take trade on the Judas swing, you will be taking trade in the Q3 region. And if you take trade in the Q4 region, that is the distribution region, you will be taking trades once price gets below the true open. So I hope it is clear up till now. Now let's move on to the most important topic of this video, as to how do I combine the quarterly theory with high probability setups. Step 1 is to align your trade with the higher time frame trend. So let's see an example. If you can see on the Euro USD chart, here we have a downward trend. So I will be looking for shorts because the trend is downward. Now let's come on to our second step. Wait for news to happen according to economic calendar. Use either the AMDX or XAMD model. So let's see a trade example. You can see the first step is satisfied that the trend is bearish. Now if I come to the trade example, you can see this is an XAMD model. Here on the Q1 chart we can see a reversal. The Q2 accumulates, and on the Q3 chart we see a Judas swing or manipulation. You can take a trade here since we had a news in Q3 quarter. So this would be my high probability entry. I would take a trade on the spike and place a stop loss above the highs, targeting these lows. So if you want to learn more about ICT's concepts in a simplified manner, you can click on the playlist on the right hand side.